Zero hedge. Quick, look surprised. You know I got to cover this one. Toronto housing market implodes. Prices plunge most on record. We talked about this earlier this year, did we not? Toronto, out of control, all this Chinese hot money flooding in there, pricing people out of their own area. They can't even get in there. And then the government stepped in and we're going to tax you if you don't live here for 6 months out of the year in some of these places. I don't know if Toronto was on that list or not. It might have been. But, again, we saw the signs. I'm doing the videos. And here it is. We knew this was going to happen. And here it is. Toronto housing market implodes. Prices plunge most on record. And yet, in early May, we wrote that the Toronto housing market is about to collapse. When we showed the flood of new home listings that had hit the market, coupled with an extreme lack of affordability, which, as we said, means homes will be unattainable to all but the oligarchs seeking safe haven for their hard-hidden gains, prices will have to adjust rather rapidly. And I'm quite certain I did that video, considering it came from Zero Hedge, and I love the content on Zero Hedge. Can we? No, can't click on that, but I would like to show you this chart in case you want to see it. So Toronto house prices and sales to listings. So we saw what happened in 08 and 09, right? And then shortly after there, 09 to 2010, hey, everything's fine. No, it's not. Bang, slams back down. 2010, 11, 12, 13, boom, comes down. Not a slam down, but comes down. And then we had this great ride up. And then, of course, as you see in 2016, it started to get insane. And that little one he's got circled in red, those both places, that would be the MLS sales to listings ratio. And then the black dark line is the house price. So we still have these insane house prices, but now the listings are plummeting. Why? I already told you a million times. But do we think house pricing is about to be absolutely destroyed? I don't know if I'd use the word destroyed, but we'll call it an adjustment. We'll call it an adjustment. And this is something that you could almost say is natural. You know, something gets too hot, it has to cool off. Something's too cold, it has to warm up. Right? You're too hot, take your AC, put it down a notch. Too cold, put it up a notch, right? Cause, effect, cause, and effect. Massively high prices, cause, effect, plummeting real estate ultimately because it has to crash. Webbot told us last year even, housing market will absolutely be coming down. Look for high-end real estate first. And we all know there's a lot of high-end real estate in Toronto. That's where one of the Chinese hotspots were. Exactly 3 months later, we were proven right because less than a year after Vancouver's housing market disintegrated, if only briefly, after the province of British Columbia instituted a 15% foreign buyer. Oh yeah, so that's what it was. That's what I was talking about. 15% foreign buyer tax, spooking the hordes of Chinese bidders who promptly returned after a several-month hiatus, sending prices to new all-time highs. Just a few months later, it's now Toronto's turn. Actually, that's a different tax. Or is it? Is it not? It was something like, maybe it was like 15% per year of your house value if you don't live in there for 6 months out of the year or rent it for 6 months out of the year. So think of, just for example, a $200,000 house. You're going to be paying $30,000 in taxes every year on a $200,000 house if you don't live in there for 6 months. I think that's the same story here. On Thursday, the Toronto Real Estate Board reported that July home prices in Canada's largest city suffered their biggest monthly drop on record amid government efforts to cool the market, and near collapse of Home Capital Group spooked speculators. Remember that company? The benchmark Toronto property price, while higher, 18% year over year, plunged 4.6%. from June. This was biggest monthly drop since records for the price index began back in the year 2000, according to Bloomberg calculations, and brought prices down in the metro area to March levels. More troubling than the price drop, however, was the sudden paralysis in the market as buyers and sellers violently disagreed about fair clearing prices, and transactions tumbled 40.4%, the biggest year-over-year decline since 2009, which, of course, you know what happened in 2008-9. Housing bust, market bust, etc., led by the detached market segment. Separately, the average price, which includes all property types, rose 5% from July 2016, less than a third of the 17% increase at this time last year. Commenting on the sudden collapse of Toronto's real estate market, Toronto Real Estate Board President Tim Sirianos said that a recent release from the Ontario government confirmed TREB's own research, which found that foreign buyers represented a small proportion of overall home buying activity in the GTA. Clearly, the year-over-year decline we experienced in July had more to do with psychology, with would-be homebuyers on the sidelines waiting to see how market conditions evolved, he said. Sure, that's probably what it was. As Bloomberg notes, local government introduced housing regulations since October that have pushed out many potential buyers. The measures were seen as necessary to cool prices climbing at an unsustainable pace. Meanwhile, shares of Home Capital Group imploded in the spring after the alternative mortgage lender failed to disclose the extent of fraudulent mortgage activity, leading to a dramatic bank run, which left nearly the company insolvent until a last-minute bailout by none other than Warren Buffett rescued the company and, according to some, the Canadian housing sector with it, as far as bailed out. As the top chart shows, which I'm not going to show you, Toronto prices were breaking records each month and deals were booming. In March, sales were up 18%, and the average home price soared 33% from the prior year to nearly $1 million Canadian dollars. That began to turn the following month when listings jumped 34%. Average prices started cooling in May, rising 15% and then up only 6% in June. To slow down the housing bubble in April, the province of Ontario introduced sweeping rental regulations that included capping rent increases and introducing a foreign investor tax. The move came after the federal government in October put restrictions on insured mortgages, and the nation's financial regulator also proposed restricting uninsured home loans this year. So, is this the end of Canada's housing bubble? Now that upward price momentum is broken, it will take a long time before the blistering price gains seen in recent months in Toronto resume. What is more concerning is if the downside, either in Toronto or elsewhere, accelerates, with the Bank of Canada finally raising rates after a 7-year hiatus, making mortgages more expensive and adding further downward pressure to home prices. The Toronto home price crash could not have come at a worse time for a country where the housing bubble is a key component to preserving the illusionary stability status quo. Again, Webbot talked about this, higher-end housing first. I've given numerous examples already. Toronto, Ontario, whatever. There are some pretty darn high house pricing. Vancouver, etc. Up around that part of the continent. Home Capital Group, again, that thing was completely dead. It was dying. Warren Buffett stepped in and gave them literally mouth-to-mouth CPR to resuscitate it, because if they didn't, I think the housing market in Canada would have been devastated, which it was kind of needing to happen. So now it hasn't been devastated, but price shock has just took place. Prices have come down massively, but the listings tell you the story as well. Again, from that chart, MLS sales to listings ratio is absolutely plummeted from near 25, which I don't know what the 25 represents, but 25 down to like 4. I don't know if that's a percent or times some amount. Again, the chart says 25 down to 5. The worst time I should say, it wasn't actually the last, looks like 08 and 09. But it wasn't exactly a straight waterfall like it is right now. And that was also between 08, 09, and the partial, yep. Well, looks like mid 2007, 8, and then as it touches 09. This, on the other hand, is like a month's worth of data or so. Where is this thing going to end? Nobody knows. Well, I think some of us do know. While we can't be specific, we can certainly say it ain't going to end well. Take care.